The US bond market just flashed a warning sign it hasn't shown since 2007, the last year before the big one. Japan just dumped $66 billion of US bonds in a single month, and the US government now has to reborrow $8 trillion in the next 12 months at higher rates, whether it wants to or not. And the Nasdaq is on track for the worst July in 22 years. And there is a rumor going viral right now that the Bank of Japan just got robbed of its independence under pressure from yours truly, the United States. And part of the story is a lie, built to make you poor, and part of it is the exact setup that turned $10,000 into $240,000 the last time it happened. Such a big gain. Winston had to lie down on that news. So today I'm going to show you which is which, not with opinions, but with the actual documents, the actual numbers, and the actual tweets. We're going to be the channel that does the boring thing the internet refuses to do. We actually check and educate. And if you are new here, let me give you the entire story in one screen. And of course, our Japan expert and analyst, Rose, has done all the hard research on that one. What happened for years is this. Big investors borrowed cheap money almost for free in Japan, and then they shipped that free money into the US and they bought things that you own. Cats are destroying everything. US stocks, US bonds, US tech. And that flood of money, well, guess what? It lifted your 401k up over the last decade. That machine is now running in reverse. So Japanese money is now leaving the US and it's going back home, where the food is quite frankly better. And when the tide goes out on the biggest lender to America, it shows up first in one place, the US bond market. Boring, I know, but very important. That's the story, right? Everything else today is detail, but it's important that you have that thing down. If you got that down, put down in the comments down below, and I know that Rose did a good job. If you're wondering why the heck you should listen to me for the next 20 minutes, my name is Felix Prehn. I used to be an investment banker. I'm also the founder of the GOAT Academy, where my team of retired Wall Street mentors have taught over 25,000 people these last 6 or 7 years. I take no sponsors. I'm not here to sell you a fund. I'm here for one reason, to hand regular people the financial education that the lovies on Wall Street would rather keep to themselves. And part of that job seems to be to cut through the flood of confident nonsense you're finding online. So we're going to debunk the noise, we're going to keep what's real, and we're going to show you why that 24x setup, in my opinion, is back. Now, there'll be a lot of data in here, and sometimes it's a little overwhelming, and I talk quite quickly. People always say, Felix, you should speak more slowly, so we shall try to do that. So you can download a free research report that Winston's written for you at felixfriends.org/Japan. Right? Grab it, read it. If you downloaded the one from yesterday, this is the updated one because a lot has happened in the last 24 hours. Not least the Japanese and the Korean stock markets have imploded. So I want to start this with a post, because it is one of the cleanest, clearest explanations of the real problem I've seen anyone put online. I don't know who tweeted this, but they deserve the credit because they put it very succinctly. There is something out there called the rollover wall. And here's what that means. The US government does not just owe money someday, roughly 8 trillion of that comes due in the next 12 months. It's like a credit card bill you got to pay at the end of the month. This one is just a little bit bigger. And it's a record, so yay, Guinness Book of Records and all that. The money won't be repaid. It has to be refinanced, which means you got to find some new suckers to buy the debt. And a lot of that old debt was borrowed when it was really cheap. Interest rates costs were very low. But today, to borrow again, the government has to pay much more. So every time it rolls over this debt, the interest bill goes higher and higher and higher. It'll literally add tens of billions of dollars a year in new interest on top of the existing deficit, which is about 2 trillion in a year. I know the numbers just sound silly at this point. And it means the mighty United States literally cannot afford higher interest rates for a very long period. The debt simply is too big. So today the debt is about 120% of the American economy. Back when Paul Volcker famously crushed inflation with brutal interest rates in the 80s, the debt was about 30%. So he actually had room Today there is no room. It's just really, really packed. I was in a lift yesterday, 19 people got in after me. I was like, what are you people doing? But that's what the bond market feels like right now. So when you hear the bond market screaming and you see the 30-year interest rate hit its highest level since 2007, understand what that pressure does. It's the 20th person getting into my lift. And it forces the people in charge towards the one exit it has always chosen when a country owes too much. Not paying it back, no. Inflating it away, because it's the only way you can stay in power. And what do? Well, you simply print a ton of money. You let inflation quietly shrink the value of the debt and the value of your savings and your salaries, but asset prices would go up, so we'll all be a genius in the stock market, which is going to be a nice feeling. And if I'm really straight with you, this is the part that actually affects your money in the next few weeks, not the next few years. Look at what is stacking up at the same time. We have that record wall of debt to refinance. We have the bond market screaming a warning that we haven't seen since 2007, and I'm not a doomer. Japan, the biggest foreign lender to America, is selling American debt. Washington is adding fuel to the fire. We got, war and borrowing and all that stuff. And then the Nasdaq is having its worst month, the worst July in 22 years. So it isn't this slow-moving Sunday story. It's a setup where the next 4 weeks, genuinely decide who gets hurt and who gets ahead. And the honest truth is, you cannot ask a tweet a question. You cannot ask a pre-recorded video like this a question either. So this is what I'm going to do for you. I'm going to go live for free for 2 full hours. You bring your questions, your worries, whatever concerns you have. And I'm going to teach you what I call the 10x summer. And I will also teach you how the 24x setup that we had last time this happened is going to play out in my humble opinion, and how we can position ourselves for that in a smart way. Not while selling everything or panicking, but just following the same rules that the big money uses. Debunk the nonsense and really understand how to take advantage of this rather than, go broke. So go to 10xsummer.com. There's a link down below in the description, and grab yourself a free ticket. And don't ask me for a replay, because there won't be a replay. It's free, but you're going to be there live. Now, here's the post that literally millions of people are reading right now. And it claims that Japan just ended the independence of its central bank. It calls it a silent coup. It says the Bank of Japan was about to raise interest rates, and it got stopped by the government. And it ends with a punchline. The only escape now is digital assets, crypto. And literally, this post got enormous reach. So let's run through the same machine we use on every scary headline. What is true and what is a trap? There's a part of this that is true. Did Japan sell US bonds? Yes. In the space of about a month, Japan sold $66 billion of American bonds. Some say it's a little bit more, but it's either way the biggest monthly drop in more than 3 years. Why? To defend their currency. The yen was collapsing, it still is. So Japan spent the equivalent of $70 billion to buy yen to prop it up. And they needed some dollars, so they sold some US government debt. And is the US bond market flashing warning signs? See. The 30-year US interest rate touched the highest level since 2007. So the frightening part of the headline is real. So hold on to that, because it matters. Now, the nonsense, though, is this. And this is where they lose the plot completely. The claim Japan ended its central bank independence through a silent coup, well, here's what actually happened. In July, the Japanese government published its yearly economic plan. An early draft had a clumsy wording that said the central bank should line up with government policy, and it left out the usual sentence about the bank's independence. The market noticed, it got nervous, and the yen in the bonds wobbled for a day like a Japanese earthquake. So what did the government do? It fixed the wording. In the final official version, it added a clear footnote pointing to the law. Article 3, I am told, says that the specific decisions on interest rates are entrusted to the Bank of Japan. It'd be nice to be able to do a Japanese accent at this point, wouldn't it? So in plain terms, they reaffirmed the bank's independence. Not a coup. The draft got cleaned up. That's it, right? But there is more to this. There is a trap 2 and a trap 3. The second claim The Bank of Japan was about to raise rates and got blocked. Well, they already raised rates in June to 1%, highest since 1995. And they've signaled more hikes are coming, heading towards about 2%. No one's blocked anything. The hikes are actually happening. The third claim is the tell of the whole story. The only escape is crypto. There is no group of serious economists or bankers that are saying, let's all buy crypto. No, it's just nonsense. And look who's saying it. If you go to the original account here, I'm not dissing this individual. He's called Stern. The account is a crypto promotion account. Its own bio says basically that. So it's not an analyst. It's a sales pitch wearing a very good news costume that is partially true and partially false, but quite dangerous. So what they've done is they've taken 3 real frightening facts. They wrap them around one false conclusion, and then they attach a product at the end, right? So the facts get your fear going, the fear switches off your thinking, and right when you're scared and not thinking, they hand you the solution. They're selling something to you, right? And it's the same move we saw in the previous Japan video I made about the fake Article 589. You said it was a banking law. It wasn't. It sounded very real, but it was completely wrong. And the scary part doesn't really need your help. This is honestly scary enough on its own, which is why you never have to invent a crisis or buy your way out of one in a panic. And in fairness, the tweet stumbled into something that I think is real without really understanding it. So let me give you the grown-up version. When Japan steps in to move its currency, it does not usually do that alone. These big interventions are typically coordinated with the US government. Japan checks with Washington. And that is actually quite normal. It's been true for decades. Now, my honest opinion is this, and this is an opinion, it's not a fact. Japan is, in all practical terms, a financial vassal state of the United States. So is the United Kingdom, by the way, and many other countries. They live inside a money system that Washington runs. They hold huge piles of US debt, and they coordinate their big moves with the US. Not a coup that happened on Tuesday. No, it's just how the dollar system has worked for 40 years. Now, some of that might be slowly changing, but I'm not seeing the US losing any of their grip on these countries. And it flips the whole conversation. So the useful question was never, was there a secret coup this week? No. The useful question is much bigger. What happens to these vassal states and to your money when the system they all depend on, the dollar system, starts creaking under $8 trillion of debt that has to be rolled over at higher interest rates? That's actually the real story. And history, it turns out, has a very, very clear answer. And the answer tells you not just what happens next, but also who gets rich from it. When a country's debt gets this big, there are really only a few ways out. And only one of them ever actually gets used. Now, Trump said he's going to grow his way out of it. That's just baloney, never going to happen. Voters will accept it enough to, vote for you. But one thing they're never going to accept is spending cuts, because it's just really, really unpopular. So the government's, well, also, they're not going to default because it would be the end of everything. So what do? Well, they just inflate away. They keep interest rates below the rate of inflation. They let rising prices slowly shrink the debt in the sense of what it's really worth. And they did this after World War II. America had even bigger debt then than it does today. And it's dug itself out by letting inflation do the work while you savers and salary earners quietly paid the bill. And if you hear about Volcker, crushing inflation in the 80s, it's because they'd taken debt from 120% of the country to 30% through this little inflation trick. Today, we're back to 120%, so the sledgehammer would now break the government's own budget. So the path is chosen for them. And that specific environment where you get high debt, high inflation eating your money, was a very, very famous playbook. Look at the 1970s. Exactly same trap, same setup that we're in right now. High inflation, weakening dollar, savers getting robbed. And what happened to the people who saw it coming? Well, gold at the start, an ounce of gold was worth $35. By January 1980, it was about $850. So if you put like $10,000 into gold, by the end of this period, you would have had $240,000. Silver actually went even further. It ran from $1.50 to about $50. So the same $10,000 in silver became over $300,000. And the stock market, the thing everyone assumes always wins, well, over that whole decade, it went basically nowhere after inflation. So the people who understood the setup didn't just survive the 70s, they actually came out on the other side really, really wealthy. And in my humble opinion, this isn't a one-time fluke. I'm not here to sell you gold, no interest in anything. Actually, somebody offered me a board seat on a gold miner the other week, and I said, no, thank you, because can't be bothered with the bother, quite frankly. Plus, I'll no longer be able to give you any sort of independent opinion on that. I do, of course, own gold and silver in physicality, sitting in a vault somewhere, nice and insured and all that. But I'm not trying to pump it, if that's what you're thinking. What I'm saying to you is that every time the system breaks and then resets, the same thing happens. The prepared get rich, the panic get poor. After the 2008 crash, an investor who simply held the market through the recovery turned $10,000 into $50,000 over the next 10 years. After the 2020 crash, if you'd held gold for just 5 years, the $10,000 became $23,000 in just 5 years. So the crisis is never the end of the opportunity. For the people who keep their heads, the crisis is the opportunity. Wall Street loves a good crisis, which is why they cause so many. So why am I talking about gold and silver? Because they're the assets that do their best work in exactly the situation we just walked through. Too much debt, the government has to inflate, and when your savings are being eaten by inflation as with your salary, hard money that can't be printed is the classic defense. And there's a wrinkle right now that makes silver especially interesting. There's a simple gauge called the gold to silver ratio, just how many ounces of silver it takes to buy 1 ounce of gold. For 50 years, that sat at about 50 to 70. Now, earlier this year, it spiked to about 80, and today it sits at 69. What the heck am I talking about? Well, compared to gold, silver is on the cheaper end of its normal range. And that's the kind of relationship that serious metal investors actually watch. Now, let me also show you, it's a little bit small, apologies for that. In the Winston app, we track this data here. Let me see if I can make it a little bit bigger. There it is. And it shows you what the panic merchants never show you, right? Forget the tweets. Look at where the big institutional money is actually going right now in the metals market. It's a real screenshot here from our Winston app. I'll put a link down below. I'll give you guys a free trial if you want to check it out. Like, zero risk. It's cancel if you hate it. And two things jump out. First, the smart money gauge on gold is reading 74. You can see that here at the top, which means far more institutional buying than selling. So the big players are accumulating gold. Exactly what you'd expect if you knew that debt is going to get inflated away. And then second, if you look at silver down here, it says supply stress is high. Every real ounce of metal, there are more than 8 paper claims. And delivery coverage is very, very low. In plain English, a lot of people own paper promises of silver, and there's nowhere near enough physical silver to back them if everybody asks for that once, which builds some pressure. So we just look at hard data. That's all we've got to look at. So let's turn all of this into something you can actually do. I break it into 3 simple jobs: protect, hold, profit. And this works whether you saw anything I've ever made before. Protect, make sure a sudden shock cannot force you to sell at the worst possible moment. That means knowing how much cash you have, not being over borrowed. And it's boring, I know, but it's the single most important step. The second part is hold. Hold means we don't panic sell good quality stuff into a scary headline. Remember 2008, the people who sold at the bottom locked in the loss. People who held turned 10K into 50K. So fear is the tax the impatient pay to the patient. And then profit. Understand which assets historically do well when a government causes massive inflation. Hard money like gold and silver, and businesses and regions that benefit from a weaker dollar. So we don't gamble here. We position calmly before the crowd figures it out. And there's the trap I don't want you falling into. The single most dangerous thing right now is not the debt or Japan or the bond market. It is a scared person reading confident nonsense, making a big irreversible money decision in a panic. And that's how people got wiped out in every crisis in history. Not by the crisis, but by their own reaction to it. So don't be the exit liquidity for some crypto account. So let's bring it all home. The danger is real. A record wall of debt, bond warnings not seen since 2007, and the biggest foreign lender to America selling. It's true. and you should take it seriously. The Coup story is fake. Nobody ended Japan's central bank. They already raised rates. And just buy crypto is obviously, the rescue plan for some crypto chap who needs some cash. And history is very loud and clear. This exact setup, too much debt and a government forced to inflate, is the setup that turned $10,000 into $240,000 for the people who understood it. I'm not promising you that return, by the way. I'm also not a financial advisor. I'm just sharing with you a history lesson that I think is worth studying, because everybody else got robbed. So crises like these don't have to destroy wealth. They just move it from the unprepared to the prepared. So you got to ask yourself, which one do you want to be? The Nasdaq is already on track for its worst July in 22 years. And the next 4 weeks, in my humble opinion, are the biggest single opportunity and also the single biggest danger. I've seen it, the next 4 weeks are the single biggest opportunity and the single biggest danger. And I'm not going to leave you to face it alone with a comment section and a scary tweet. So join me live. Learn what Wall Street already knows. Learn what I learned from my Wall Street mentors. 2 hours. Bring your questions. We're going to work through it all. Go to 10xsummer.com and see this and learn to see this as an opportunity with a clear path and a clear structure. So go to 10xsummer.com. If this video has been somewhat helpful, share it with a friend, not least for Rose and Winston's appearance. And I wish you a safe 2026. The Japanese yen just crashed to its weakest level against the dollar in 40 years. Not 10 years, not 20, 40 years. And Japan's central bank just raised their interest rates to their highest level